What's up, guys? Kanal here, Bulls on Wall Street. Guys, I want to talk to you a little bit about a setup that we've been using quite a bit in our chat room that's a little bit different than what we normally do. So one of the things that you probably noticed is that the structure of the market has changed a little bit. We were in a very, very intense uptrend, or what we call like a gorilla bull run for the last couple months. And the market structure has started to change as we started to break under moving averages. The news flow has changed, and even our MAs are starting to point down, right? And we've broken some levels of support. Now, does that mean like the bear market is over or anything, or bull market is over or anything like that? No. All markets at some point consolidate and digest their gains. And frankly, the more that you go up, right, the bigger you have to pull back, or the longer you have to consolidate. If you look at past years in the NASDAQ or S&P 500, you'll often spend 2 or 3 months just going sideways after a run. And, this could be something, similar where we chop around for a little bit. But one of the things that you guys always should be aware of is that when the market is pulling back like that, the setups that you're using when the market is trending up its moving averages, for example, are going to be vastly different. When you get a market that's above its 90 MA and it's just kind of cruising up every day, most of the time the market itself will gap up. If not, the stocks that you own, like hot stocks like Tesla or DocuSign or whatever they were back, during that time, they will also gap up pretty much every day or most days of the week. So the morning you'll start to see strength. So that's an underlying structural thing that happens in big bull markets. Now, what happens is when you start to break under moving averages, that phenomena changes, and all of a sudden you start to get more gap downs in the markets. You see like last handful of days, right? You see these big gap downs. So that changes a lot of things. So the trend or Momo trades that you're doing during this phase are not going to work during this phase. So you have to adapt your trading, and it'll take a few days when the market starts to shift to know that. Always keep an eye on your indexes. When you start to break under key levels, that will give you the signal to start to shift the amount of trading you're doing in terms of the quantity, and then also you have to shift around the quality of your trades and look for different types of setups, and that's going to be really, really important. So one of the setups that we've been really doing pretty well in our chat room is short squeezes. So short squeezes are stocks that essentially are going to be a squeeze after you get like a big dump. So what we would call a rubber band setup, a rubber band long setup, and it's a one-off thing. You don't once you catch it for one big day, usually the trade is over. But one of the things that you'll see is that with the trends in big name stocks breaking, what you want to do is figure out how to do bounce setups. So when the market is trending up, we're doing breakout setups. When the market is pulling back hard, you want to do bounce setups, but the bounce setups have to be in the extreme or on big levels of support, or they just don't work. So in typical, what I want to be doing is I'll run a scan. So you can build a scan on your TC2000 or any broker, and essentially what you're going to be looking for is, I've already got one written up. I'll give you the parameters. I'll give you the parameters. And so what I'm looking for, I use the stochastics indicator 533. On a 5-day period, I'm looking for something that's very oversold. A stochastics indicator, anything under 20 indicates oversold. Anything under 10 equals extreme oversold. So I'm looking for a stock that's extreme oversold, stochastics under 10. All right. I want to see a stock that's breaking under its lower Bollinger Bands or its lower channels, showing an extreme level of push down. The eye test on this is that you want to be able to look for stocks that are also down a certain percentage. So you can put in like condition for price percent change, and now like you can do so price percent change 5 days, so you can indicate like say minus 20% or more. So you're looking for like those big kind of pullbacks, and then put a simple volume parameter in, and you're usually good to go. And so what will typically happen is as you start to build out your list, and when the market starts to get a little oversold, you do that, you know, what I'm essentially looking for is the stocks that are the most oversold and are down the most over a period of days. So what I like to do, and I love doing this on TC1000, I'll do a column sort. So like you can do a column sort for stochastics. I know it's called stochastics, but I just have it. So hit this indicator button here, and what you want to do is change around the settings to like a 533. So now like what you have here is, you know, daily chart. You want the time frame daily chart. You want this to go, and now you've got a stochastics indicator, 533. So what you can actually do is start to filter around like stocks that are like the most oversold. Now you'll see like a lot of this stuff over here is you get some junky stocks like these, like $1, $2, $3, $4 stocks. I don't typically like those. So what you can do is also put in a price condition. So, you know, put in price. And now what you can start to do is put in a condition. So say like, and you can do this for say $20. And if you want low price stocks, you can do less than, right? So you can always kind of change around what the parameters are of the particular stock. So now you got stochastics indicator. You can filter by like what's the most oversold. And then you can even add other filters into it. So like if I wanted to sort by just stocks that are down the most the last 5 days, right? I can hit this 5-day sort, and now I'll see, okay, ILMN, FSLR, so on and so forth. If you want to see the stocks that are down the most the last 30 days, you can sort by that, and you'll start to get different functions. So that's the way to actually, you know, scan or find the particular name that you're doing. Now, on the trading side of things, you know, what I'm looking for, first of all, I need an eye test. Like I need a stock that's right down like big time. So like this NNOX was a breakout over here at 30, and it ran to almost $70. So now like what I'm trying to do here is like as this stock is starting to pull back into some level of support, ideally I'd like a level or a zone that I can kind of use as a way to manage my risk, but I also know there might be some demand there. And then it's just a matter of, right, trying to play for potential bounce. So usually the signal is, there's two different signals to actually know that the stock is triggering. Number one, if it opens weak on the day and it goes red to green, meaning like say it opened at $27 and it went red to green, that would be a particular trigger that I'm going to be trading this back and forth throughout the day. If the stock gaps up, which is fine, that's a sign of strength, then essentially what I want to be doing is hitting the first pullback when I get the confirmation that it's holding. So like for us in our chat room, you know, we got our Discord room, and you guys are more than welcome to, you know, come and join us. You know, we have free chat days and, you know, stuff, but I'm trading, you know, live in front of the guys on video every day. So it's kind of fun. The first thing I want to do is first dip into the moving averages. When I get a green candle to hold, I'm interested. It doesn't mean I'm necessarily getting. I could take a feeler and put a stop under, and it would be not confirmation, but it'd be like okay, we've got the beginning of something. But typically what I'll do is as it starts to hold over the VWAP like this, now I'm ready to go. So like as the stock breaks out, what I want to do is put myself in a scenario where I can get into this stock that's got maybe a lot of room to bounce, but I'm only going to risk like 20, 30, 40 cents. If you have 200 shares, you have a 30, 40 cent risk, right? It's like less than $100. If you have a larger account, you're doing 1,000 shares, you'd have a $300 risk on something that's frankly moving around like $10, $15 a day. That'd be a nice way to start off. Now, the key to this type of trade is that you're going to have to massage the balls on. So you're going to be in and out. So your first trade is about building some padding, right? Getting some profit on it, $500, $1,000. And then what happens is if it starts to hold and build, you can start, now you got the padding from the first trade, and you can really start to go. So for me, like, you know, I usually like to do on something like this, 5, 30, 40 cent risk, 1,000 to 1,500 shares. And then it's just a matter of, right, scaling in and out. So as you start to get profits, right, you want to always sell off some into the spike. Now, I actually sold off half of the spike, and I got stopped out flat on the rest because I put a stop in my buy price to make it a free trade. And it literally came down to the damn penny and took me out. I could have been a little bit looser, but the stock is in a huge downtrend. You don't want to be too loose. Now, what happens is as it starts to hold and builds over the VWAP, when you start to hold and build over the VWAP, as it starts to come out of range, you can just take this thing back. You want a really tight range, and now it's off to the races. Like now, like you've got confirmation that it's holding, and you're reloading. Remember, you got some cushion from the first one. Now it's right, push and push it. So now, like once you're back in, right, scale out, pulls back to the 9. That's good. If it holds, you can reload. I didn't reload. I'm just kind of trying to hold through this. And now, like when the range gets loose and stuff like that and breaks under the 9 EMA, that's usually when I get out. Now, it doesn't mean that the trade is over. What that means is that now I've got, right, a lot of cushion, and I can still keep building some size, but also got an awesome cushion to kind of reload the boat here. So I know like the breakout spot is here at 31.50. There's a good shot that it's going to come back and retest it. So actually, as this stock came back into the VWAP, I reloaded some, and I always I wait for a green candle to hold. That's my confirmation. I'll put a stop under the range. And you know what? It popped up a little bit, and then it just came out. I ended up getting stopped out flat. That's totally fine. As the stock came back and retested its old breakout spot and reheld the VWAP, I re-entered this, and we played it for an end-of-day run with the stop just under right these lows over here. And now I'm back in this thing once those MAs start to curl up. I always like to wait for the MAs to start to curl up. So it tells me that the short-term trend is starting to build. So as this thing starts to build, now I'm reloaded in this thing. And now like I've got a lot of cushion from my beginning trades, and you can play for a really nice end of day run and keep it going, and it's, of course, you want to scale out along the way, sell into resisted spots. And that's kind of how you want to build out your day and trade around it. A lot of times we get confused and we think having a big home run trade means that you're going to be like you buy a stock at 10 and it goes to 15 and you hold it and that's it, right? And you just made 50%. Really how like a professional day trader is going to, because there's only so many of those stocks, how a professional day trader is going to build out their days. They know that there's 3 stages to the trading day. You have your morning, which has different setups. The morning is 9:30 to 10:30. You have 3 different setups you can use. ORB, quick pullback buy, red to green. As the morning goes past, you're going to look at flag patterns, pullback patterns to the 9 or 20 EMA. You're going to look at VWAP patterns, and then end of day, you're going to have VWAP patterns or day-long consolidation patterns, so on and so forth. So when you have 3 stages to the trading day, if you have a stock that's say going to move like $3 or $4, most likely, if you're going to do it right and it trends throughout the day, you're going to probably hit it 4 or 5 times, but minimum 3 times for the 3 stages of the trading day. And that's how you really build up a bigger day. You take up 1 or 2 points, then you take 1 or 2 points, then you take 1 or 2 points. And guess what? If you do that 2 or 3 times throughout the day, right now, the stock may have only moved, 5 points intraday from top to bottom, but you have 7 because you're trading the ebbs and flows of it. And that's really how you catch, that kind of short squeeze. Oh, you always want to wait for that first pullback. And, I did something similar on, Nikola a couple days ago. And it's a very, very just easy setup, It's that when you get that flush down, right? Wait and see how it holds over at the VWAP. And it's like that first pop and then the first dip when it starts to hold, you play the squeeze. Then it pulls back to the VWAP, you play the squeeze. And it's just a very, very simple setup that's just anything you can do. So remember, when you're thinking about the rubber band long setup, what do you need for conditions? What do you need for condition? You need oversold stochastics under 10, lower Bollinger Band. If it's a new issue, it won't have a Bollinger Band. Volume minimum 500,000, and then sort it by either the stochastics or sort it by what's down the most the last 5 days. That will give you a nice cushion into what's really building, and then you can really come in and kind of shred it and so on and so forth. So that's kind of trading in a nutshell, guys. So first thing first, when you have a pattern, to summarize, number 1, know your market, right? Are you an uptrend, downtrend in the market? Number 2, whatever type of play you're trying to do, develop a filter on it. On T2000, you can develop filters for anything. People use FinViz, Thinkorswim. I mean, it's all the same stuff. Once you have the filter and you narrow down your ideas, then it's about finding intraday trading patterns to execute, and then you have yourself a trade. So guys, let me know if you have any questions, concerns. Feel free to leave any comments or just email me, KUNAL@BULLSON.WS. Take care.